Good afternoon, everyone. This is Henry, and as we get into tonight's video newsletter, I'm going to start off by looking at a weekly chart of the Qs. This is going to be a recap of a lot of things that I have said in the past. I just don't want this to sound like hindsight analysis, right? I want to be clear that all of these comments were made as these charts were unfolding, but they just really even stuck, in my mind, because I was thinking about how are we going to be describing the future of this market when it is kind of just an up and away kind of scenario? Well, for me, it's going to be the weekly squeeze. And it's a big part of the trading that I really enjoy doing, where you're not thinking too much about macro, etc. Of course, the rates and the imminent cuts, all of that definitely plays into this. But, you can make your life a lot easier by just focusing on the signal. And here you've got this weekly squeeze that is now fired long. You'll notice from the close above the high of the low bar, that was a very nice entry. And then from there, we have very cleanly been working the one time framing process, which is just that every weekly bar has made a better high and a better low, or has been inside the range of the previous bar. And as long as that type of price action continues, it just is one way of trying to stick with the trend that, at least for now, is still intact. So if we look at that off of the weekly squeeze in the Qs, we can kind of note that a lot of the momentum is coming from there. If we then move over to the SPX monthly chart, we've got a very clear example of what you like to see in the DMI, right, where DMI plus has shifted, kind of made the cross through DMI minus. The two of them are now moving away from each other, which is one way of thinking that bulls are in charge. And then, Sam will have a great video for you guys tomorrow night, I'm sure, but it's just an opportunity to review closing annual, and in this case, monthly as well, right? So the SPX monthly squeeze will be able to be confirmed to the long side, and that just really sets up for a very bullish 2024. It does not mean it's going to go straight up, of course, but could we see something like the 1272 extension of this move into about 5180? I think that is one path that we definitely want to keep ourselves aware of. So heading into tomorrow, I think it is a little bit more difficult to call. If you've been following the work that I've been giving you through the Stock Traders Almanac, this has been a very helpful guide, not only for setting expectations to say, all right, Santa rally, fair enough, but what type of percentage moves does that mean? And also, where do you tend to see the most strength? So this has been pretty much right on the money for each day. And you can see right here where we've been looking at the couple of back-to-back closes that have been almost perfectly unchanged. That's the same thing that history shows as well. And then we look to the first 2 days of the new trading year, and that's when the strength kicks back in. So for tomorrow, I wouldn't be surprised to see it maybe a little bit weak, maybe a little bit sloppy. At some point, I do think the actual test of 4,800 in cash is what the index would like to do, but it may be saving that for next week. So off the top, those are the two indexes that I spend the most time with. I then work to decipher them by keeping ideas like the TNX also in focus, because with these short-term rates coming down in such a dramatic fashion, of course, that speaks to the cuts that are on the horizon. And the most curious part of it for me is that we are below the 618 retracement. So it's the idea, if a more bullish trend were intact, if this was the campaign that was still very much in control, well, then the 618 would offer support and we would turn up from there. Seeing as how that has not really offered support and we just continue to push lower, your next decision will be the 786. And then if that proportion does not hold, well, then we might as well go down and have a look at the old lows. And at least for now, those are the patterns that I am following there. Inside that, the dollar, especially when just viewed through the cash index, has completed a fireline test. Let that populate for just a moment, but you'll see the fireline that's 101.31. So we've been using this as a downside target for some time. When these levels are completed, we do have to acknowledge the potential of a shift from that area. Now keep in mind that this weighting is going to be against a basket of currencies, where I've been looking a little bit more at the more direct relationship that you'll see through the euro. So euro dollar has cleared each of the instances of symmetry that I was looking at before. So really not calling these for any type of failure per se, but just saying, those are measured moves in relationship to previous advances. As you start advancing more than that, I think it just starts to kind of turn on the magnetic feature of these fire lines. I'll tell you, you guys know I get to brag on David a lot, but he's really created one of the most fascinating technical study sets that I've ever used. You got to spend a little bit of time on it, but that's just to say that, one, it's going to be magnetic. At some point, the path up into that target should become accelerated. Then, if the target can be met, it may be met with a fair degree of precision, and then it turns into resistance and a very formidable level. I mean, some of the most important resistance and support when used in the other way, some of the best of those kinds of levels that I have found. So that's just to say that I'm still targeting 1288, but once that is met, especially if that was something that was able to be met for the January expiration, we'll get into that a little bit more here in just a bit, but if all that were to line up, that's just my take of where the market finally finds a more meaningful top. So from there, I think it makes sense to go through the Mag7s, even though it may seem cliche to some degree. I really do think getting a good feel for these names provides great trade opportunities, right? You've got tons of liquidity, great options markets. So let's kind of look at the take of Apple. And, you talk about these monthly bars closing. Well, the monthly in Apple has not seen the squeeze histogram shift. Really, since it started bottoming out back here towards, the beginning of the year. But then where you really try to follow it is when the squeeze fires. When the transitions of the red dots go to black, and you say, all right, squeeze is firing. I'd like to see that the momentum bars continue up. Now, being a monthly chart, a lot can happen inside of that. But as long as the histogram remains bullish, the low compression phase of this has not fired, I believe we can continue to look for higher prices in Apple. The way that I would be looking at the more immediate decision would just be a comparison to your previous correction. So you can see here through November 22nd, we had an 8-day down period. The correction that we've seen from 199.62 was a 9-day. So this 3-pointed tool is showing you the high and low that I'm measuring. Then it's marking the high that I am projecting from. Again, that mark would be the 8 days. It was one more down day. I don't do work like that a lot, but when I see it stand out pretty clearly and it's within 1 day of being the same, okay, I'm at least going to maybe add it to the chart. The signal that I use all the time is the close above the high of the low bar, right? This is using, say we start with some assumptions here, and we're going to assume that Apple is in an uptrend. Well, then what we're going to try to do is buy it when it's cheapest, the cheapest it's been in the past 21 days, but in an effort to filter out spots where 21 days of weakness just turns to fresh 21 days of weakness, right? And the market just keeps on selling off. We wait for price to prove it to us. And when we have a day that has seen that, we're saying, okay, the general tide is going this way. This has been a cheap spot inside it. It's starting to pick back up. Let's see if we can get in on that wave. So that's what we got today in Apple. Is that going to be for sure? Of course not. But I do think it helps us focus on 200. From there, we can move over into Microsoft, which has really a lot of interesting characteristics for the things that I like to study technically. First of which is we've got a high compression squeeze. Today is the first day of seeing the standard squeeze move into the high compression phase, which essentially just says that the consolidation has become just that much tighter, right? The Bollinger Band Keltner channel relationship is about as tight as we will measure it, and you can see that in price, as price has just really continued to compress. So price cannot stay that tightly wound forever. Microsoft is eventually going to be a $400 stock, or it's going to be a $350 stock. And in an effort to figure that out, I'm going to step back and look at something like a monthly chart and say, one, proportions to previous swings, but just what is the path here? Look at it like a 6-year-old might, right? Well, it's lower left to upper right. So I'm going to take that big picture view and work to incorporate it here. You'll also notice that Microsoft has made its best price traded ever up here at 384, split adjusted, of course. But, there's nothing bearish about new lifetime highs, and that's what just makes this 618 retracement so interesting. So when you see from 384 down into the swing low, look at where I like to call it the belly button level, the navel of most humans will follow this proportion. So when you think about how nature, architecture, the daily chart of Microsoft is showing you this 618 that has so precisely been resistance, this is one way that trends can reverse, where what has been so bullish then makes this elation pop up, fails on its retracement, and then rolls over. So that could happen with a high compression squeeze, and it kind of has, I just want to at least show you that pattern. That's not really what I'm going to be looking for, given how bullish the rest of the markets are. And also trying to use a little bit of, there's no such thing as a quadruple top. This fourth test of it, we'll see tomorrow. I'd be surprised to see it get through tomorrow, but you can only test it so many times before it is eventually going to give you a clear decision. If we then go over into Google, this is a name that is seeing its weekly squeeze with a favorable proportion to its previous 618. So as you consider names, and I think this is a very helpful take where, you can kind of catch yourself looking at a daily chart like this that doesn't have as much of a look back and just studying squeezes there. But you're really going to find better luck if you go back to the biggest time frame that you can analyze, and grab very significant swing highs and swing lows and work on pursuing those that are above their 618. You see how Google stayed below this for several months, and that would have been a tougher spot to be long. But now that we have this squeeze that is forming and you are so clearly above this level, you just start looking at the old high as being a self-fulfilling kind of prophecy. So I like Google very much within that scope. I think some of these, and you got to be careful, you got to know your risk, but I want to tell you, you kind of just hold your nose and buy for the January expiration, maybe February, to give yourself a little more time, and then sell at the January expiration. But, all pullbacks on the daily chart, I think, are buying opportunities within the scope of the weekly. And if you understand that conversation about that proportion, you'll then see it in Meta, right? So Meta, as it approached its 618 retracement, really acted like it wasn't even there. You maybe had a week where you were below it, but for such a large time frame, for such a large correction, you made very quick work of that resistance. So as you start getting above the 618, then the squeeze forms while price is in a favorable proportion to that previous retracement. So then it makes it easier for price to just lift up because it wants to go look at the old swing high. So, that's where it's headed. Can I tell you the exact squiggles it takes to get there? I try, but of course not, right? But it's just, in time, I think that's where we're headed. And when these most critical components all still have squeezes and good patterns, I just continue to err in favor of that trend. So talking about those with favorable proportions, then contrast them to Amazon, right? So in Amazon, we have 188.65. I would run that down into the swing low at 81. Now, it's just now starting to get through it, but this is where I would just say, and as much as I like Amazon, I think it too is a buy. We'll look at it against the daily fire line in just a minute. But do you see how the proportion had me a little, especially as a lot of these were forming, I didn't like it as much below that, because then this band I just think all this in here could very well be resistance for Amazon. It just has that much further to go until it gets to its old lifetime high. So while it will likely eventually get it, I just think that it helps this resistance in the fire line work a little bit better. Do you see, again, we were talking about it in the dollar conversation, but I was telling you how fire lines can be magnetic, and once they are met, they turn to resistance. Because it's one thing to call a target, have your target hit, and then it just keeps on going, right? And you just leave money on the table, and that's not what any of us want to do. But to call a target, see it hit, and then that is the high. I mean, fire line is 55.56. That wick was 55.63. So, has Amazon fallen apart? No, it's still holding the 5 EMA, which is incredibly bullish. But, if you have long calls, you don't want to spend a week trading sideways. You want to be able to take the momentum of the squeeze into that level, and that's where you wrap up the position. Past that, we'll just kind of have to see how Amazon moves with the rest of the market into the first of the year. Next, we'll take a look at Tesla, because this is the same thing where when you start off with the weekly chart and you see how from 414 down into this almost right at the centennial level, the retracement is 295. So you bounce up through that, and bears are still in control from this time frame, from this perspective. But then you have to think you've got a squeeze that is coiling here with a DMI that is shifting in bullish favor. So let's move down into the daily and see what it says. Well, again, the thing that stands out the most is the failure at the fire line. I can't tell you how much this is so important to me, and I wish I would have traded my piece of it a little bit better here. But, there was some headlines out on Tesla today, and I'm just so convinced that none of them mean anything. I mean, we know that, right? The part about the robot that they were trying to claim was from an accident that was 2 years ago. So there's just stuff going on in the news that, you really cannot blame the stock price for it. To me, that's more of a uncertain, whimsical thing. But these voodoo lines are good stuff, and you move into a fire line, it's a spot you're probably going to at least pause. So yesterday failed just a few pennies shy of it. Today went ahead and grabbed the level, and then all the way back into the 10 EMA. I think this is another spot where I can show you the call wall that was sitting there at 262.5. Right, so it traded a little bit above that level, but when you've got the call wall, the fire line, all of that lined up there together, it's a pretty slim chance you're going to push through it on the first try. So this is the first meaningful retracement, and it's going to be measured, I would say, in proportion to this day. The movement that you saw on the 20th, right? Everybody saw that as a big, significant bearish day, and in and of itself it was. But look how quickly we recovered to go on to make a fresh high. Okay, from there, I'm basically just wanting to compare that correction to today's correction. That would give you room to about 252.16. Essentially, it just seems like a pattern to me that would be opening itself up to a flush tomorrow, kind of get something, maybe symmetry works perfect, maybe it needs to get a little below 250. But then I would look to see if it could recover that strike. If it does not, then that's going to be a bigger warning sign. So it either needs to resume that trend pretty much immediately to let the momentum of this daily squeeze continue. Otherwise, that's all going to be getting ready for a deeper correction. So again, that's the majority of the names that I've been most focused on. I think if you can get a good view of those, it can give you a pretty good backing for the rest of what you're trying to pursue. I do think the VIX is looking for single digits. You can see that we've got a squeeze in play here. And if we, it's tough to call for that when you've got something that has been so beaten down. But, the squeeze here was a very formidable signal. It started that one time framing that just cascaded down into the teens, and here the squeeze is again. So if bears were really going to have a shot, this should have been the move. That was just a couple of days, and it's right back to the same old story immediately after. So again, I think that's the VIX into single digits. The moving average of the put-call ratio needs to get down below 0.6. and then I think we'll be able to maybe look for more of a topping kind of situation. But that's just my humble take on the markets from where I see them right here. You guys have a great Friday, a great long weekend, and I look forward to getting back into it with you next year.